Right, episode number 5 of the series. Doing 3 on the head tonight. The last one. It's going to be fair value gaps. So fair value gaps is another concept I use in partnership with others to confirm my bias or a trade. So fair value gap is, or slash, also known as an imbalance, is a formation basically of 3 candles where there is a gap in price between the first candle's top wick and the third candle's bottom wick. So that's basically what a fair value gap is. Obviously that's like the dumbed down version, the explanation, that's the easiest one to understand. Obviously there's different balances, bearish and bullish. Some are more high probability, obviously some are less, but there's plenty of fair value gaps here. One here. Okay, good one. Right, this is probably the best one to look at. Right, 3 candles. The gap between this top wick and this bottom wick, so the first candle's top wick and the third candle's bottom wick, is the fair value gap. It's the gap in price. So this, obviously there's no wick here, so this is a gap in price, because obviously price didn't go there in this candle and price didn't go there in this candle. So this here, fair value gap. It's an imbalance in price, because obviously if there was no imbalance there, the wicks would line up basically. Price went there and then retraced. But obviously price didn't go there in this candle, price didn't go there in this candle, it went in this candle. Price come up, come down, come down, come up, come here, closed here, the next one opened up, created this gap here, and then the next one opened up here, come down, come back up. This gap would probably get tapped back into here, and then obviously we had a little rejection there. And then a bearish example could be here. So the top of this can at the bottom of this one, top of this one. So this would be a bullish fair value gap. Bullish fair value gap here. That would be a bullish fair value gap where there's a gap in the top of the first and the bottom of the third. And then obviously bearish fair value gap would be the bottom of the first and the top of the third. It's just reversed. So we have one here. Use a box. Obviously not every fair value gap will get tapped. This one did. Here. So this one did. So this fair value gap got tapped in. As you can see, we close respecting. So no, the candle's body didn't close above. If the candle's body closed above, this one invalidates this fair value gap. So you wouldn't want to short off this fair value gap if this closed here. Obviously, like I said in the candlestick episode, the bodies tell the story, the wicks just do the damage. So when paying attention to respecting and closing, respecting fair value gaps, you want to pay attention to the candle's bodies other than the wicks, because obviously this wick could come up, sweep this little high over here, and then come back down and still close respecting, and it'll still be valid to take shorts. So obviously combine then this with liquidity, and obviously you understand that in the last video I was on about swing highs, swing lows. So here we swept liquidity. Probably would have been in some sort of SMT here. So I'll go over that in a couple of videos down the line. And then this fair value gap are respected. You could have entered here on the retrace. You can put your stops above the candle that made the formation. So with this candle, 1, 2, 3. This the second, obviously. Gap here, tapped into, target the internal low. You would have hit a 1 to 2.1 R, nice and easy. Obviously some don't get tapped back into, some fair value gaps. They're known as breakaway gaps. They're just displacement down. A price doesn't need to come back in to continue to the downside or the upside. If I can find a bearish, bullish example. Okay, here. So obviously we respect this one quite a lot, and as you can see, if I just put lines across, some people use lines. I normally use boxes. Here, 1 minute fair value gap. As you can see, the wicks did all the damage. They're just stop hunts, trying to stop people out. But the body's all closed in or above respecting. So this is a valid entry. Obviously you could have gone in here, the initial. If I was to get in here, I probably would have targeted this internal high. Stops below the first candle, 1 to 1.8. If I was targeted higher, I probably would have put my stops to break even and got stopped out. But if you waited, as you can see, I get rid of these lines. Going back to the last video, liquidity. Swept liquidity here. Swept this sell side, this internal sell side, like I said in the last video. If you haven't seen that video, please go back and rewatch it a couple of times if you don't understand. And then we swept this liquidity inside this fair value gap. And then obviously continued up to this internal high. Didn't quite make it to these before rolling over, and then obviously disrespecting this fair value gap and continuing lower down for prices. Obviously, if you're looking on the 1 minute chart, it's obviously less probable that every single fair value gap will get hit. The higher the time frame, the bigger the fair value gap, the more chance of it respecting. So using liquidity and fair value gaps, you can often see that most of my trades come from higher time frame fair value gaps, but obviously I enter on the lower time frame. So this is quite big one, 4 hour bearish imbalance. Every time we've come in, we've respected for 2 days now. 2 days. We're getting closer and closer to trying to disrespect it, but obviously it's still respecting. And then obviously we're stuck in this 4 hour fair value gap as well. We're just ranging this week basically. But obviously on the 4 hour this looks rubbish, but on the 1 hour, on the 1 minute, sorry. Obviously this is still the 4 hour fair value gap. We've come in, swept a lot of sell side, buy side, sorry, and then obviously continued down. But obviously this was a bearish fair value gap. This was a bearish 4 hour fair value gap that we've respected, and then we've entered on the lower time frame because of its respecting. And then obviously because price is fractal, what happens on the higher time frame could happen on every single time frame. We've got an imbalance here that was respected, here, here, probably some others, and then obviously we respected here as well. Consolidate it for a bit, and then obviously continuing in down to this internal swing low, which probably will get hit overnight. It's pretty easy for value gaps. Obviously, there's something called inverse fair value gaps. I'll go on that in the next video because they kind of link into two, but obviously I don't want to overstimulate, give you too much information all at once. I want you to think about it, try and find them on a chart, mark them out on a chart just to get yourself used to knowing what to look for and what time frames to look for. Obviously, there's a fair value gap here that we ended up respecting going towards buy side. It's pretty easy to spot. 3-candle formation. If it's bullish, you want the top of the first candle's wick, bottom of the third candle's wick. Another fair value gap, obviously higher then, and then obviously rolled over. Again, another fair value gap here. We've respected. Obviously, you'll go through a phase where, like I did when I first started, of just marking out absolutely every single fair value gap known to man. As you get a bit more educated and know what to look for, you only need a certain amount of fair value gaps. Like I've only had for this week, I've only had this fair value gap and obviously this 4-hour fair value gap marked out. That's all I really needed because we're just ranging from fair value gap to fair value gap until one eventually breaks. Now that'll probably happen with high impact news at some point this week. But yeah, so I'll go over it one last time before I end the video. A bullish fair value gap is a formation of 3 candles. Formation of 3 candles here. 1, 2, 3. And then obviously the fair value gap actual part is between the top of the first candle's wick and the bottom of the third candle's wick, sorry. And then bearish wise, it is the bottom of the first wick and then the top wick of the third candle, like here, respected, and then obviously gradually went down to another high time frame value up. So yeah, it's pretty much it. It's nothing huge. Obviously, the higher the time frame fair value gap, the more chance you have of respecting it. So like on the 1 minute, see there's a group of a couple bullish candles here at 11:45. This would probably be, find 11:45. This would probably be a like 2 or a 2-minute or a 5-minute. Yeah, see, so that formation of 1 minute candles is actually a 5-minute fair value gap that got respected. So if you see a couple of fair value gaps or bullish candles all in one go, that normally indicates that there's a higher time frame fair value gap there. So it's better off if you see, a 1-minute displace up. That normally will be higher time frame fair value gap. Like here, that's probably maybe a 1 hour. Yep, 1 hour. 2 1-hour fair value gaps. Not quite a 4-hour daily, but it's definitely a 1 hour. Yeah, that's pretty much it. That'll probably be the last video for the night. Again, I'll link the Discord in the description of my TikTok. Please go follow my TikTok. I'm trying to grow. But yeah, that's about it. Thank you.